Hey guys, so today we'll be doing Concall analysis of Tata Power for Q2 FY25. So the management opens off by saying that monsoon was irregular in first quarter and second quarter. I mean, say, during June July quarter and also in the October as well. Because of that, the demand has been low. Because and they're also expecting that the winter will be little severe because of long monsoon, and hence the power demand will be there for it. And also many hydro plants won't be able to generate during winter months, hence the demand power has to be met by coal plants. So section 11 has also been implemented. So in section 11, basically the government will repay all the cost that a plant will undergo, like such a way that the plant should not operate in loss. So yeah, then the profit after tax and EBITDA, all these things has increased. Profit after tax by 51%, EBITDA by 23%, and if you see half year basis, it has increased by 17%. That is EBITDA, and PAT is up by 41%. So these are all just amazing numbers. So giving updates on manufacturing side, the company said their 4.3 gigawatt cell module of manufacturing plant is fully operational, but cell plant only 2 gigawatt is operational, and they are now getting it stabilized. By the end of November it will be stabilized, and then the second gigawatt also will be commissioned, and by hopefully by December even that line will be stabilized. So they are saying there will be massive improvement on manufacturing side in the coming quarters onwards. And also they are saying that the cell plant which they are producing, the cell which they are producing in their plant has highest efficiency in the country, and they're with a much better yield. Then they say that there are a large number of large utility projects which will be implemented in Q3 and Q4, especially third party projects. They all will be implemented, so thus there will be significant jump in revenue in the coming quarters. And coming to rooftop solar also, they are picking up very good pace, and they are one of the biggest player in the country, and they want to reach 10 lakh rooftop in Odisha, in UP and in Rajasthan, and they are also working very closely with Kerala and Rajasthan, also Chhattisgarh as well. So under PM Surya Ghar Yojana, they are planning to implement all these things, and their transmission and distribution business has also done very well, and they have got 4 projects, out of which 2 will be implemented in commissioned in FY25, and the remaining 2 in FY26. And they also won another big project of 765 kilovolt transmission line in Odisha from Paradeep to Angul. And on pumped hydro project, their first 1000 megawatt project has been approved by the board, and work will start from 1st January 25, that is within 2 months. And the project has received all necessary approvals, and remaining few will be approved in November December, and work will start by then. And similarly 600 megawatt of Bhutan project will also start from January of 2025, and in fact already some work has already started in the Bhutan project. Then they are also working on 1800 megawatt project at Shiravta, and hopefully by mid next year they'll start all the works, and once necessary approvals are in place. And Odisha Discom, it was very badly impacted because of cyclone effect, but they were able to quickly restore, and this restoration work was praised by people as well as the government, like they appreciated, and many states are also looking to replicate this kind of arrangement. Then they said that both ICRA, CARE have enhanced their rating, and S&P Global also has enhanced their rating, which is they have got almost good as sovereign rating. So yeah, that takes care of balance sheet is what they're saying. And then when it comes to projects which supply power 24/7, so basically RTC and FDRE, these are such a projects where as you know, renewable energy is not continuous source of supply. So what they do is they'll generate power, and then they'll store it in batteries or other medium of storage, and then they'll supply to discom. So these projects are known as RTC and FDRE. So RTC is round the clock, and FDRE was there something. So yeah, you can Google it. So basically these projects supply power without any uninterrupted supply, without any uninterrupted supply. So yeah, so they are working with many discoms, and also with many commercial and industrial customers who are looking for renewable electricity, so that they can reduce their carbon footprint. So they are working closely with all these people. And also management has given in the presentation that they are planning to reach 1 lakh crore revenue by FY30, and also which is right now around 62,000 crores, and they are planning to reach profit after tax, which is 2.6x times of what it is right now. So if you see net to net, if that really happens, then I think share price has the potential to go 2.6x in the coming 6 years. So the first question is, a person asks like, what will be the future of the solar system manufacturing capacity? Like if they're planning to add a more capacity or integrate it backward. Like right now they're doing cell and modules. Will they plan to do wafers and all those things? So the management said as of now they are planning to stabilize their cell line. That is the task which they have for short term. Once plants are stabilized, they want the highest operational efficiency to be there in the country. And once all these things are met, then they'll think about doing expansion or what to do. That the company will think later, is what the management is saying. So then the person asked, like in Maharashtra recently for some big pumped hydro storage power project, there was bidding and we didn't participate. So how is it like? How is it going? And so the management said that all the power that they will be generating from RTC and FDRE projects, they will not only supply to discoms, but they will also supply to industrial and commercial consumers who are looking for clean energy solutions. So they want to play a very critical role in supporting all these industries as well. So we have a huge number of inquiries coming for these projects, and we'll soon be tying up with all of them, is what they're saying. Then the person asked, like solar order book has been on a lower side, like it's around 15,000 crores. So is it opportunity which is low, or is it the competitive intensity is up going on, and why is it like so that the order book is low? So the management said that they have very large number of third party order book which they want to finish it within this financial year. Then they have their own mega, like around 5 gigawatt of renewable projects which are there, which are under various stages of implementation, and they want to complete all of these also by FY26, and then they'll start building up like pipeline for FY27 onwards. So that is their plan. So they're very having a very calibrated approach, that they want to finish the projects which are in hand right now, and then they'll start bidding again for projects which will bring greater value for the consumers. So then another person asked, how much renewable energy capacity are we planning to add every financial year? So the management said that by FY26, around 5 gigawatt of construction projects which are there right now will be completed by FY26. So if we see a run rate of nearly 2 to 2.5 gigawatt is what they are working on. So then another person asks, like how are they selling these modules which they're manufacturing to third party, or they're using it for their own internal consumption? How is it? So the company says as of now it's equally divided between rooftop solar, third party, and their own projects. So going forward by this financial year end, most of the third party projects will be over. So once from there on, it will be for their own use, like utility scale projects and rooftop projects. So then another person asks, like, are there any non-recurring items which you'd like to call out in Q2? So the management said that there is some with respect to Tata Power Company Limited Delhi. So there are some liquidation plans happening of their assets in the next 2 to 3 years, where they'll be getting some money. So like they had around 170 crores of liquidation, which is shown as part of other income in our distribution business. And we also have dividend received from ITPC of 220 crores, and this dividend most likely was a profit received, like accumulation of past profits which has been happening. So yeah, so some of these items are recurring and some of them are non-recurring. So then another person asks, like, profit for Q2 and EBITDA has been more. Is it because of lower fuel cost, and when do you see it going back to normal rate? So the management said that fuel cost does not move their profit up or down. It's the regulatory environment which they are working in, and it's not because of fuel which it has gone up or down. And their clusters, that is their different business verticals, are doing really well. Like renewable energy, profitability for current quarter is 300 crore when compared to 186 in previous quarter, which is up 61%. And all other like transmission, general cluster, distribution, all of them are performing well, and hence the profit or EBITDA and as all these increased. Then another person asks, like, why is that the Mundra plant supplementary power purchase agreement is not yet happening? Like, why is it getting delayed? And why is it not what is the availability of the plant for this quarter? So the management said that Mundra plant suffered a damage of coal conveyor system because of heavy rains, and it happened on August 27th. And whole of September they did not operate, but within a period of 1 month, conveyor was repaired, and now it's operating at around 90% capacity. Then there is one more pump which needs to be repaired, and if it's repaired November to say December, it should be around 95 to 97% of ability. So yeah, it will catch up. And secondly, they are in discussion with the state government for purchase power agreement to be signed. And of course, as of now, there is Section 11, so all the cost will pass through, and they'll get the money for that. So yeah, that's the thing. And then the person asked, like, is it because of Section 11 that the supplementary power purchase agreement has not yet been signed, is what the company person asked. So the management said that yeah, they expect as of now there is no urgency to sign power purchase agreement, because Section 11 is already there, and they're giving us full cost of the plant. So yeah, but they're hopeful that now sincere effort will be put, and most fully, and hopefully that they should quickly finalize the signing the purchase power agreement with the state government. So then the person asks, the Bhivpuri power supply, like hydro project, it's a largely a brownfield project, and so capex was relatively on lower, at somewhat 4,500 to 5,000 crores. So is there? It seems like there's cost inflation and configuration changing from 6,000 megawatt to 8,000 megawatt. So will how much will the capital cost inflation be? So the management said that whatever price they have submitted, that was the detailed final price, and it was not the initial cost. And they're also usually it's designed for 6 hours, these pumped storage hydro projects, but the company is designing this one for 8 hours. And yeah, so whatever 4,500 to 5,000 crores which they have mentioned, that is final price, and they expect the project to be completed within this cost only. It should be on lower side and not on the higher side, is what the management said. So and then the person says that this project has 44-month timeline, so hopefully by FY29 it will be started. So yeah, the management said that it will be started, and the projects have different topography and all the architecture. So yeah, hopefully it will start by then. Then the person asks, like, on EPC side, that is third party projects or whatever. So the recently target which was said was 11,000 crores. So are you doing that or what? Like, is there a possibility risk to that target? So the management said that the way their business is moving forward, they want their more projects of their own rather than third party projects. So they like so they would like to use their resources and all those things for their own project purposes, like whatever they're producing in their plant and things like that. So then another person asked, like, Viewberry project is 5,600 cost. Any indication of what could be the potential revenue on annual basis? So the management says that it will be on par with the whatever projects they are doing right now, and but they won't be like more details as of now. Will be difficult to give. So yeah, it should be nothing less than what the regulated business is doing as of now. And the second one was, like, in Odisha there was a small drop in profit after tax, and what was this for was the question. So the management said that because of heavy rains, they were not able to collect dues from some remote access places, so that's why it was not possible. But September collection has been good, and in October also it will pick up. So whatever shortfall was there, they'll make up for it, is what the management is saying. So then another person asked, like, we have been doing around 250 to 260 megawatts of solar capacity addition on quarterly basis, but yearly you're saying you want to do 2 to 2.5. So how is that possible? Like, how can we do that? So the management said that Q2 and Q3, some of them execution got delayed because their DCR line, that is domestic content requirement, that is the Indian government has said that cells which are being manufactured should have some minimum domestic content requirement, and that's those cells are getting delayed. If projects have that cells, then they'll get some subsidies and other things from government. So once that line is started, then they'll do a lot of it will happen at very fast pace in Q4. So that's what they're saying, that they should see that Q4 results will be significantly very higher, and yeah, because of all this capacity addition which will happen and things which will come out. So yeah, between now and Q4 you'll see a large amount of capacity being added. Then another person asked like for wind turbine generators we have floated a tender for 3 gigawatt of that. So how will we evaluate and like how what is the procedure? So the management said that they'll do first technical evaluation and then the cost evaluation. So once they have finalized the suppliers, then they'll place the order. So before December is what they're planning to place the order. Then a person asked like there has been 440 crore of exceptional item in profit after tax number. So how is it like how does it why did that happen? So the management said that like they it has happened because 23 companies or subsidiaries of TRPL got merged into TRPL, and because of that there was a small stamp duty implication of rupees 140 crores which they had to give, and then there's about like 330 crore roughly deferred tax which they had to do because of post merger. So all this will be the effect, but it's all one time and it's all a non-cash expense. So if you see the net profit this year could have been 440 crore higher, but because of this thing it has happened. So in coming quarters, yeah, like net profit growth has been exceptionally well if we remove this 440 crore one-off expense. And at EBITDA level they're saying the 3800 crore which has happened, it is the recurring one. So yeah, the management says yes, that is the recurring EBITDA. Then another person asked like as of now total pipeline of projects is around 21,668 megawatts. So Bhivpuri is not yet added, right? So the management said yes, right, because it got approved in board meeting which happened yesterday, today. So that's why Bhivpuri is not yet added. So if we add 1,000 watt, like so it will be 22688 megawatts of projects which is under the pipeline. So then another person asked like how is the plan for debt reduction in next 2 to 3 years. So the management said as of now their debt is very comfortable. So there is no need to think for us to reduce the debt any further because the ratings are also improving, and yeah, compared to many of their peers they are in a very comfortable position. So yeah, they want to maintain this debt to coverage ratio. Then the person asks how much debt to equity are you planning to have. So the management says that 1.5 to 2x is a healthy ratio which they are aiming to be in for a company like ours. So then another person asked like on the manufacturing business side, so like they had some 1,000 crores of revenue and 614 megawatt. So roughly realization was around 20 cents. So like whereas the other companies are selling at 15, 14, 16 cents. So how is it like? So the management said that they are commanding a little premium because their products have very good quality, and because of all the services they offer, they are able to command a little premium over a thing. But 20 cents, what you said is not right. It's somewhat little lower than that, is what the management is saying. So then another person asked like Mundra coal and shipping cluster, if they look they have around 516 crore of EBITDA, and if I remove shipping, like there's 437 crore EBITDA for Mundra plant. While we had lower sales, but EBITDA has increased. Like why, what has happened? So the management says that this is because of section 11. Like basically what happens is it is the way in which the plants are run. You have to look at it annualized utilization from perspective, and fixed costs are similarly apportioned over 12 months. So right now because of section 11 it might look higher, but in the coming quarters it will get normalized, and yeah, it will be seen correctly is what the management is saying. So then another person asked, like, does it make sense to export the cells which you are manufacturing and import the cells for module plant? And we have seen many number of companies doing that and generating more EBITDA. So how does that work? So the management said that we have to normally use our AALM and DCR modules, that is which has minimum domestic content for most of the projects which are in pipeline, so that they can get subsidies from the government, and hence right now they are not looking at export, but they are looking for own consumption. But once the like full capacity is being manufactured, that is of 4.2 or 4.3 gigawatt, they can assume that like 20 to 30% of that will be exported and rest will be used for internal. Then another person asked like what is the potential capacity utilization which we can reach from our module and cell facilities. So the management said around 97 to 98%, and they want to be the best company in India with highest yield and highest operational efficiency when it comes to solar module and solar cell manufacturing. So yeah, this is it guys. This is Tata Power Concall. The Concall looks promising, and they are setting up new projects. They are going backward integrating up to manufacturing cells and executing the projects. We don't know, they might start doing wafers as well and other things. So they are planning to increase their revenue by almost 1.5x, profits by 2.5x. So the company looks like really promising, and it's a Tata group. So yeah, there won't be much corporate governance issue and things like that. So yeah, thank you. If you like the call, then do hit that like and subscribe button and share it with your friends.